All right. Welcome to episode 2 of Trading with the Politicians. In this video, we're going to look at Democrat investor Tony Wied from Minnesota. Just a quick look at his profile and some of the trades, his recent trades that we're going to discuss. Now, he hasn't been very active in the market, as you can see, only 1, 2, 3, 4, 5, 6, 7, 8 trades, and we are going to review, I think, 7 of them. We're not going to be long. We're going to go through these really fast and just take a look at the decisions that he made and why he might have made those decisions. So you can see his number of trades here, only 8 of them. Not very active, but he does make big time moves, as you see. His orders and position sizes, whether he's buying or selling closing positions, are usually somewhere in the range of 50 to 100,000, and that's 3 contracts. So if they are 100,000, this guy's playing with big money. He's going in. If it was 50,000, he'd be in 150, or short, or selling in this case when we start to break these down. So 50 to 100,000, if it was, they only put in the range up. They're supposed to disclose everything. The politicians, the federal law stipulates that they're supposed to disclose all the information. But for the sake of this, if it were on the high end of 100,000, this means that he would have sold 3 contracts at 100,000, meaning he would have liquidated 300,000 out of the market when he closed his positions for Canadian National Railway. Likewise, on this Block SQ, this company has recently changed their name, and we'll talk about them. But March 16th, just 4 days ago, somewhere in the range of 100,000 to 250,000, 3 contracts, pretty big money. So that could be as much as low as 300,000 to as much as 750,000 in this Block SQ, and he did that on the 16th. We're going to talk about that and talk about why it's so significant. And you see the others. There's one that I'm not going to spend too much time on, and that's Tractor Supply Company, and it's because in true Harmonic Trading Club fashion, as I reviewed these, this is the only one that doesn't have a harmonic activity on it. But now, with that introduction being said, let's jump right into it. So, the first of his 7 that we're going to review, Canadian National Railway, CNI. Now, this was a sale, so this is going to be a strange one because I don't understand why he sold on March 16th, a couple of days ago, if you see right over here. Okay, so that's not a good idea, and I'll tell you why it's not a good idea. It's because he could have hung in there. We'll talk about the harmonic, field harmonic pattern here. If I start from this low to this high, this is basically going to be a whole bunch of harmonic pattern and advanced pattern recognition, especially on this set here. This entire market, as you see why it was consolidating, gives me a chance to teach a lot too, though. As you saw this box, this market that I plotted out, as it was consolidating, it was just firing off pattern after pattern. But let's just jump into where he is. So with me looking at this low here to this high, I'm looking at the retracement here. So this is the X leg, this is A, this is B. The B validates at 786, I'm sorry, 78%, 786 retracement of X to A, right? And what that does is that automatically throws us into the butterfly pattern. I don't have to be that concerned with C here. I will go ahead and plot some of these out. Just so that I can just make it a kind of like a full training. I try to do this whenever I have the opportunity to teach on patterns, I will. And the butterfly pattern is pretty cool, pretty reactive, not the most profitable, not as powerful as Gartley, not as powerful as Cypher, but you can get usually a little bit of a push on it. Not as dramatic as you can on the others, Bat, Gartley, Cypher, Crab, but you can usually get something off of it. And this is why he should have stayed. But X, A, and B, and this is C up here. So me knowing that B is valid because he got a 786 retracement of X to A. C is valid because I know that that's a 382 retracement. It only requires a 382 retracement of A to B. And then the completion down here, which would be D. So this is where things get interesting because he actually sold at D. But that is a 127 extension. I'm sorry, inversion, opposite way of A to X. So you see why I'm questioning this. And at this point right here, I don't think that his advisor did him justice. There was no reason to sell and close your position on this stock right here, in my technical assessment of it. So looking at this, you got a bullish opportunity, very strong bullish opportunity here with this butterfly pattern here. So you can see where it came wick down and filled, right there. So this is absolutely an opportunity to get long. And if I were to just try to make more sense of that for you, you see that immediately after you wick down, get this fill on this butterfly pattern, that then you finally got a green day. So they probably were under a little bit of pressure and a little bit of panic. We're on the weekly chart. I apologize. They were after 3 straight weeks of falling. And if you come up here, that was 104. And then once they got down to 95, $10 more, with that type of position size at possibly 300,000, I can understand pulling out. But the correct technical play there would have been that you have a filled advanced butterfly pattern that operates in A to B is equal to C D fashion, completing this pattern here. So forget the butterfly. There's a whole pattern on the right side, and that's why when the price action filled, you got the green week right there. That's exactly why it happened, because it's absolutely time for this thing to reverse. Now let's talk about if he did not pull out, what his targets would have been. And I understand he might have wanted to do something else with that capital. I'm going to talk about that too. But I can understand what he was doing somewhat. Let me just do that over. I just want to get clean. I can kind of understand that when I talk about where it looks like he might have moved that money. So he sold these positions here. Okay, but the truth is he didn't have to yet. The truth is he had, usually you will get at least a 382 retracement. Okay, so he could have recovered a lot of that. If he was on this free fall here and decided to sell and move that money, once this goes through and reacts like it's supposed to, you usually get a 382 retracement would have pushed him back up to the previous structure that you see here. So see, even you can see it. Okay, so but he didn't want to hang in there. His advisor, somebody like I said, other than needing to take that capital and move it into what he did next, because these were done on the same day, on March 16th. Other than that, I think he could have waited. He could have waited on both sides. He could have waited to get some of this profit back off of Canadian National Railway. More than likely, he stood like at least a 50-50 chance of riding back up when he closed at $97 all the way to 109. That is a tremendous move. I think that he should be hoping that doesn't happen. We got enough going on here to show that was very likely with the fill here on the advanced pattern, and knowing where the structure is, market's going to want to suck back up to structure. Plus you got the A to B is equal to CD pattern plus the butterfly pattern. If we also, I'm not sure that this part's going to work for us, but let's just go take a look and see what the volume looks like. And you see the green volume, you see the bulls coming in and trying to take that. And this is on a weekly chart. So he closed in the middle of a doji reversal candle too. I'm missing that part. The green doji reversal candle showing that this is, so he's got 2 reversal signals here. Pretty powerful stuff. And one, there's a lot of stuff that was going in his favor. I wish that his advisor understood advanced pattern recognition and would have been able to tell him what was in front of him. But the A to B is equal to CD pattern is a counter trend trade opportunity, where at D, which you see when D is there, you usually get a pushback up. And sometimes you can, because of the A to B is equal to CD action. Sometimes he did have the opportunity to push back up to 118. He would have absolutely murdered the market. That's if it I understand I'm reaching off into the future. That's if it happens. But project wise, that's kind of like technical. That's kind of how you can look at it on the aggressive end. But the conservative end, the passive end, would have been to look to make his way back to 109 and come back around and talk about the next trade that he did. He sold this and then he moved over to go buy another company, and that's this XYZ company. Okay, and this is called it's called XYZ. They just branded it that. I think that's going to be temporary. This company was named Block Inc. But now that they are XYZ, They are, I'm going to tell you real quick, XYZ versus SQ. Yeah, so this company, XYZ, rebranded. They have Cash App, Afterpay, and Tidal or Tidal. So this company went up and bought a whole bunch. I mean, Cash App is a powerful company to have, and so is Afterpay. But anyway, enough of that. There isn't a harmonic. I was wondering if we had an advanced cipher pattern. That would have been even better for him to come in. He just came in, right? 4 days ago. But the cipher pattern is invalid. Close, but it's nowhere near valid. So no cipher pattern, no advanced pattern. But what I did notice is he did come in right at some very, very powerful structure. All right. And remember, this is all about structure analysis. Okay. So he did do that, and he got that to the T. The investor, the advisor, they got him going right on the money. And then what he can expect is there's no trend to go off of, for a target. But he's basically, what's happening is basically trading this double bottom right here, which is it's a pretty strong play, trading that double bottom. And of course, they're happy because they got in at the right time and they got the bullish week. We're on the weekly chart. They got the bullish week. They got the structure. They got a lot of good stuff going in their favor. It would have been great if it would have been oversold on the weekly. Maybe if I go down to the day, it's oversold. Let's just check. Yeah, okay. So even better for them. And they've had several days. His 4 days, that all that green represents his 4 days minus today. One attack, funny, but they did have something very, very major on the daily chart, and that was being oversold with bullish divergence. So this was a perfect setup. I don't know if it's him. I don't know if if his is investor, but a perfect setup on this double bottom. I'll just come back out because we just want to go in and talk about potential targets. So they're not looking at, like, this doesn't tell us or show us anything like, breaking above this, out of this market. Basically, I'll just go ahead again and box off this market, and inside of that market, certain things were happening. Like there was like a bad or Gartley right here, for investors who might have wanted to short this, and that would have been pretty powerful. That'd have been a pretty big move for a trader who trades options, who wanted to put a put option in there and short it right there. That would have been pretty good. But that looks like that's the only one. You have to put it in the double bottom action here, which just typically you can't expect to trade it back up to structure. That's really not how this works. You basically would just look at you would basically your targets would be the retracement off the high to low here. So grabbing the retracement tool and then coming over here to the top of that, and then coming down here, swing high to swing low, and then basically a TP1 right around here at $70. Pretty affordable too. Nice opportunity. I need to see if I have some extra money to play around with. This might be a good one. Make sure that you read the disclaimer. Okay, we don't provide financial advice. We don't provide trading signals. We're not responsible for what anyone does with their capital in the markets. This is for educational and entertainment purposes, as you can see. And then I might speak to some things that might interest me. That's the furthest extent that you can go with this stuff. As always, consult a financial professional of your choice before putting your capital at risk in these very dangerous and volatile markets, where you can lose not only some, but all of your capital if you don't know what you're doing, or if the market goes against you. Now, when you have a double bottom, and I do have a class on trading double tops and double bottoms, and I do have a class on taking targets, and I do have a class on Fibonacci retracements, on how your target should be based off of Fibonacci retracements. So in this case here, swing high to swing low, 38% back up, TP1, 61% TP2. And if he is lucky, I don't know how long they're going to hang around, but it seems like he has a very good investor working for them, for him, investing his capital for him. So far, so good from what I can see. But if he is able to get all of that, then this is kind of what the opportunity will look like, which stops right up under the previous structure. All right. So that is amazing. That is a very, very, very good opportunity that he's in. And if they want to get real aggressive, they don't have to exit. I'm pretty sure that me knowing that I have the proof that well, I can't really say that. Let me back up. I was going to say, well, I'm going to get to some parts where it looks like his investor might understand structure analysis. But if they want to go ahead and be aggressive, they can leave some money on the table here, take most of it, leave some there, and try to make it up here for a TP3. That's how that looks. But pretty good job on that one. Mr. Tim Wied. Okay. The next thing that he had is Charles Schwab. Charles Schwab, okay, this is a sell. He pulled his capital out of Charles Schwab, and there's a certain reason that they did it, and I'm going to talk about that real quick. This was an exit, okay? They didn't buy, they sold here. They exited the position. And it's a good exit, but I'm going to give you some history behind it. So what happened was they didn't exit the first time when they were supposed to, which was back on April of 2024. Okay, so they stayed in this thing. They're long term on this one, right? April 2024, when this Gartley pattern happened, and you guys know how much I love the Gartley pattern, and now you can see with your eyes why. You can see how powerful it is, right? So you got the reaction off the Gartley pattern. See, the problem with them is they had to go through that free fall by not exiting when the Gartley pattern was filled. But now this makes me question, does his advisor understand advanced pattern recognition? Because if you did, as an account manager, you would have sold, and you would have just waited for the next opportunity to come in. You would have not went for this free fall from $75 all the way to $60. That is a tremendous. And this position size, I'm going to look at it. His position size was 3 contracts at 250,000. So 750,000, almost $1 million loss right there. 750,000 on that ride down right there. Not good. So, but what they did is they, it found structure. They were pretty happy about that. It did find some structure. And then it consolidated for a little bit. There was a decision to be made, and then it broke out. And when it broke out, all they were doing was looking to get back even. So what he did is right here on March 16th, he exited again. He exited. So they took their free fall, they let it come back, and they got out. And they got out because they know that is a sell zone. They know, if you look at it right there, right? We don't know what's going to happen right now, but especially this topping off showing that we can't get too much higher than that. So this part they did get right. Double top, they know that that's too strong, you can't, and they got out here. Just like you fell here, and same thing here. So they did get this part right, understanding that in that zone, those are all going to be short zones. So they got that part right. See this? So they got that part right to keep him from going through that again. But to be honest with you, he didn't have to go through this trash for a whole year, which is basically what he did. This is just a box of junk, and he had to ride that out until the market came back to get them either their winnings back or break even or whatever it was. But hopefully that made sense. I know that might have been kind of complex to some people, but let me just try to say it again. They closed the position here on March 16th, 2025. They should have sold the position in April or May, early May of 2024. So it took them a year to get that back to sell. And inside of that year, they almost blew the account, right? Because their plan was $650,000. All right. I know that was a lot, but the reason I teach this stuff is because a lot of people don't understand when and why they're losing when the market goes against them. Sometimes it might be something as powerful as advanced Gartley pattern in the opposite bias of what you're doing. He should have absolutely left May 1st. Okay. And he wouldn't have had to go through that and wait to get all the way back to say, okay, take me out. I hope that's clear enough. Okay. The next thing is Microsoft. This, I don't know, maybe they were watching my video. I put a video out 4 days ago on 3/16. Like, he did a lot of transaction on 3/16 on March 16, 4 days ago. And that's actually when I made this Microsoft video. 4 days ago. Did I even do my Microsoft video, or was it Apple? But anyway, they have, so I think they might have been aware of this. It's just got an unexpected drawdown. This is a Gartley pattern too. Again, a lot of Gartley patterns that you guys can see, but Gartley pattern, and then a bunch of trash static, but it for traders with the stop loss. And I did talk about this morning too on this morning's video. It did not stop out. Came very close to stopping them out. They would have lost all the capital, but it looks like they would have stayed in. And then basically, this one is just very simple. This is just Microsoft having the ability to fire off and recover some of that. I don't know if it's going to be the structure up here, right, which will be right where you saw it kind of stop right here, and you see the B leg, and then you see more of it. Remember, it's always going to be about structure. Okay, I don't care what anyone tells you. Look left, structure leaves clues always. Okay, so maybe there is a chance to go and test these areas up here, and that might be what they're looking for, or they might have an even longer term projection on Microsoft. But this one is very simple. There is an advanced pattern that they are involved in. One of the best, 70% win percentage, Gartley. Not too much to say about this one. It's kind of self-explanatory. It didn't really take me that long to go through that. Gartley pattern filled, right? Starts to react, of course, right? So as soon as he comes down and fills with the red, you get your green reaction. But I think this is just related to a lot of, they got some legal stuff going on over there at Microsoft. And you got, there's just some fundamentals that are not allowing this thing to just take off like it should. These are several days. Got a big now this might help. Let me say this. I'm glad I saw this. This guy right here might help and save the day. And this big elephant candle, or a bullish engulfing candle with just a slight retracement on there, they might be okay here. Okay. Engulfing candle 618 retracement on it, right? So I'm going a little bit deeper, people, but this is what happens when you understand technical analysis and structure analysis. So the bullish engulfing candle, usually when you get that, that's a sign. That is a sign that you usually are going to take off and go your way. So they did very good. They did very good right there. And that happened to be the next day after he opened. So the engulfing candle was on the 16th, the 17th, and you see. And coming up, all that really happened was, this is pretty good, just to come up and then kind of like a retest, and then you should, in theory, kind of like take off. And if that happens, that's great. It's great for a lot of people. But at least we over here at the Harmonic Trading Club were able to jump in and show you that if this does take off, at least we know why. I think me, you, and my viewers, I think we might be the only people that know why. You're dealing with a pattern that wins according to its founder, H.M. Gartley, who wrote about this in his book, Profits in the Stock Market, in 1972, I think. Profits in the Stock Market, page 22. That's why it's called the 222 Gartley pattern. That's what this is. And he boasted, and he wrote that he back tested this over a 30-year period, and it won 7 out of 10 times. He said that this right here has a 70% win rate. And if that's what Mr. Tony Wied is involved in, good luck to you. I don't have an extra $400 or $800 just sitting aside that I'm ready to throw at Microsoft in the middle of this right now. All right. Is that 4? So that's 4. So it looks like I'm only going to do 6 out of the 8. Next up is Monster Energy, and his Monster Energy, he sold it on the 16th. Now, this is one of his investors' best moves, because he sold after the, in my opinion, second most powerful pattern, Gartley first, because there's documentation for it, and then Cypher second. I don't know how many people know that this is actually my favorite pattern. So they were able to ride this Cypher pattern, this bullish Cypher pattern, all the way from $46 all the way to $56. I understand it only looks like a $10 move, but that's pretty much, they stayed in there longer than they needed to. They could have got happy feet, and they could have left right here. They could have left way back. But they hung in there. It did take a long time just for that $10 swing. But either way, they did get it and made a bunch of money off of it. They made a bunch of money and they exited. They exited right here. Here's the 16th right here. Right here, there's the 16th, 17th. They left right here in this zone, and that was good enough, not being too greedy. They did leave some meat on the bone. They did leave a little bit of meat on the bone, a few more dollars, but it's okay. They did very well to exit that. If they rolled that up like that and they were in there 200 they were in there for $750,000, they crushed it on that. Okay, and this is why APR is king. And as I'm walking through and teaching these things, make sure that there's some value in here for you. All right, so just talking about the cipher pattern real quick. The only one, not the only one, it used to be like that, but it is allowed to have it. Well, one of the requirements, C must be higher than A. So looking at its rules of engagement, see that X to A leg right there? The B leg is valid if you get a 382 retracement. This one is 42%. That's perfect. The C leg is valid with a 127 extension of X to A. It's 138%. That's perfect. It can go as high as 1414, but cannot close beyond 1414. And then the D leg completion is a 786 retracement of X to C. Not lining it up all the way perfectly, but it's 788. So this one was perfect. This one, like to get a cipher like that with almost no drawdown is like absolutely amazing, especially when you're loaded up on such a large position size. So his investor did this is a A++ job on this opportunity right here. All right, cool. Hope you guys got all that. That one was kind of self-explanatory. Devastating cipher pattern, rides it all the way up back to the C leg, which you're able to do on these, and then exit the position. Beautiful work. All right, and then last but not least, this one has a couple of different technicals in it I want to talk about. So the first thing is not going to be a advanced pattern, but a powerful technique. So the first thing that they did is they used the 2618 technique, which I'm very proud of his investor for being able to do this. So 2618 technique, meaning double bottom in this case, followed by break and close beyond previous structure, right? Double bottom followed by break and close beyond previous structure, okay? Followed by 618 retracement, and that's the entry, all right? So followed by from the low to the high, 618. Now it's kind of crazy because these guys had stuff that was just working almost too much to perfection. Okay. So double bottom followed by break and close beyond previous structure, followed by 618 retracement, little complex retest, and then go. And then they just sold, right? They got out. And look where they got out. They got out right here, right? On the 16th. Well, why is that not showing that? Oh, okay. So he got out on February 13th. Okay, this is the last one. So this would be the first thing that he did is exited this on February. Still right here at the top of it. Okay. And that was okay because he exited at the completion close to the A to B is equal to CD pattern of that move right there at D. Perfect. They exited like amazing work by his investor. And that's also at least a 127 extension from this low to this high. So if I grab the Fibonacci extension and if I go to this low to this high, and I come back, 127 on the dot, confluent with the A to B is equal to CD pattern completion, which would be D here on the A to B is equal to CD. So that is great work. So just walking through his stuff, remember trading with the politicians and seeing what they know and seeing what they do. It can tell us a lot. It can help us align ourselves to see if we know what we're doing, if we're doing the right things. One more thing on this. They did leave some meat on the bone. And I want to talk about that real fast because see how from the right side here, how I ran that extension low to high, that 127 extension. That's also the completion of this Gartley pattern right here. perfect. So he did not allow this Gartley pattern to kill him this time. So one of them, they did get destroyed on it, and this time they didn't. You guys see that? So they won off the 2618 and exited at the decompletion of the Gartley. I almost left that out. And that was kind of like one of the things that stood out to me. I wanted to talk about that. So we're going to keep this series going because we're able to look at what they do, and a lot of times we're able to get ideas from them if they line up, if they meet our criteria, see if when they bought something, if it makes sense. Remember this block, or what is now XYZ. I mean, hey, so yeah, but give this one a thumbs up so that the algorithm can know that there's a very, very special video out there packed with this type of information, that a lot of people could use. Look at the market through a different set of lenses, through a harmonic lens, if you feel me on that. And share the video if you know somebody that this can help. And subscribe to the channel if you're not subscribed. I don't know why you wouldn't be subscribed to a channel that can show and display this type of research, this type of technical analysis, and teach like we do over here at the Harmonic Trading Club. So that's all we got on this one. You guys take care of yourselves, and we'll see you on the next episode of Trading with the Politicians. We're out.